Years ago, I was on a webinar from somebody I knew on Facebook, and they had a guy on there and he pitched us ownership in a Bitcoin mining rig. And the narrative was that what we're going to do is we're going to run the rig for you. You're going to own a piece of this particular rig. I don't know how many people would own one rig. And then you get a percentage of the profits once we sell these Bitcoins back into the market. And the buy-in at this time was around $5,000 to get one share. And like I said, I don't know how many shares contributed to one Bitcoin mining rig device, or however you want to call it. And this was around maybe 2016, maybe 2017. And this was before Bitcoin was really big, where it was still kind of underneath the mainstream. And then we saw pretty much after that started to become really, really big. It's big now. We had this, 2 eras of everybody being a crypto expert. That's kind of falling back. But then eventually we're going to move back into that space again. Here's an article on how Bitcoin mining machines are going for a deep discount because of the lowering of the price of Bitcoin, and also because the interest rate is going up. And what I'm going to get you to understand is that these Bitcoin miners are not financing their operations with Bitcoin. They're financing their operations with USD. And as the cost of capital goes up, and as the value of Bitcoin using the dollar as the reserve currency, right, to actually anchor the Bitcoin, as that goes higher, right, they're now having issues with financing, issues with expansion. They also have to pay that debt back that they got financed at a higher cost of capital. And therefore, what some of them are doing are shutting down operations. Many of them are selling their machines. Many of them are selling machines that are not even out of the box. And we're going to go ahead and talk about that, because what you're also seeing in this situation is that there's trades here that are available for people that kind of understand what's going on in this space. So here's an article from the Wall Street Journal: Bitcoin mining machines for sale at a deep discount. The most efficient Bitcoin mining machines are selling for 77% less than last year. These machines currently cost around $24 per 100 terahashes. Last year, the same machines cost $106. So currently right now, they're going for $24 per 100 terahashes. Last year, they were going for $106 per 100 terahashes. Mining companies like Core Scientific, which expanded during the bull run, sometimes borrowing hundreds of millions to buy hardware and to build warehouses to house the hardware. These operations were profitable when Bitcoin and crypto were booming. Now, we're going to stop here because I want you to ask yourself something. How come Core Scientific didn't finance themselves using Bitcoin? They borrowed hundreds of USD that they now are over leveraged. And one of the things you always got to ask yourself about people that are in the Bitcoin space, how come all their transactions are not done with Bitcoin? And this is why I try to get people to ask. They were saying that, well, Kanye West can just take his hundreds of millions of dollars and go into Bitcoin. I says, well, if he's not bankable, right, because his face is no good, then once he tries to raise capital to, do manufacturing, do distribution, he has to go back to some type of fiat currency. And essentially, they've cut him out of that system. Just going into Bitcoin may be a way to store his money, but he won't be able to do financing and do operations with Bitcoin, because who's going to take that as payment for services or for products? So once the Federal Reserve started raising interest rates, risk assets became less attractive. Tech stocks, cryptocurrencies fell. Bitcoin crashed. It's currently around 70% from a year ago. Mining companies' expenses, especially their debt payments, overwhelmed their revenue. For some, their only move was to raise cash, is to sell hardware. So right now, the only way they can raise money to try to pay off some of their debts is to start selling off their hardware. So they're going to start to liquidate some of their assets. One of the largest mining companies in the world, Core Scientific, announced on Wednesday that it wouldn't make payments on several of its equipment and other financing, and expects to run out of cash by the end of the year, and it's exploring its options. And the stock plunged amidst those particular bankruptcy fears. Now it's trading at 16 cents, down almost 99% year to date. So we got a 99% downturn in the stock year to year. It's trading at around 16 cents, right? Other mining companies have also seen declines. TerraWolf down 93%. Stronghold Digital down 94%. Riot Blockchain down 74%. Hut Mining Corp down 70%. Marathon Digital Holdings is around 67%. Argo Blockchain is getting ready to sell 3,800 brand new machines. These machines have not even been taken out of the box just to raise capital. Again, they're not selling those machines for Bitcoin. They're selling those machines for USD. And so I want people to really understand is that they finance their operations with USD. They have to pay it back with USD. And that's their issue. Sellers like argue and dominate the market right now. And this guy, Ethan Vera, runs a trading desk that brokers deals for the equipment. So he reckoned that there were only 3 dozen large buyers in the Western Hemisphere. Almost everyone's a seller. Now, what do we know? That there's more sellers than buyers. We now have a surplus of equipment, which means what? The price is going to go down. Because you have more people looking to sell than we have people looking to buy. Therefore, the sellers may have to take haircuts on the price just to try to move the equipment. So Grayscale Bitcoin Trust, a fund that launched in 2013, has $13 billion in assets under management. So the firm is set up to buy and operate these discount rate mining rigs. So it's currently seeking investors, asking for a minimum buy-in of $25,000. Now, when I was dealing with this situation, the minimum buy-in was $5,000. Now it's went up to $25,000. Buyers of the fund will get an ongoing share of the profit from the mining operation. It will set up with the purchase equipment. Jeff Berkeley, who runs the ASIC trading desk for Foundry, another mining services firm, says activity on his desk has picked up. He suspects reluctant sellers selling out hope for better prices were forced by the rising hash rate to finally just capitulate and sell. It's ground miners to the point where they don't have a choice anymore. In the coming weeks, it's going to get even crazier. And what I want people to understand is first, there's a trade here. What's the trade? Buying this distressed equipment because you believe that the price will be higher later on, and getting people to invest in buying this distressed equipment because you can convince them and persuade them that the price of Bitcoin would be greater, let's say 5 years from now, than what it currently is. People that have capital just sitting on the wayside, whether it was a $25,000 buy-in, this may be a good opportunity for them. Person that has $100,000 just sitting by the wayside, they may say, hey, you know what? Let me take a $25,000 exposure to this Bitcoin deal because I believe Bitcoin 5 years from now will be greater than what it is, and I can own a piece of a mining rig, and then I just get the profits, but I don't have to run it. And therefore, they see the trade in this particular opportunity. What I don't want you to do is argue over, well, I'm not going to say what I don't want you to do because you can do whatever you want to do. However, what I want to encourage you to do is not argue over Bitcoin, the price, whether or not these companies should have financed in Bitcoin or USD, yada, yada, yada. What I want to encourage you to do is see the trade and see the opportunity. Because companies that understand that this distressed market now, there's an opportunity to buy their distressed assets and then convince other people that these distressed assets actually have a value, even though the value may not be seen now, it can be seen down the road. But see, these companies cannot hold on to those assets because why? They're having what we call a liquidity or a cash crunch right now. They need cash. Therefore, if they have to start liquidating parts of their business to generate cash to pay off their creditors or the people that are in debt to, they just have to do what they have to do. But as a trader, what I want you to do is see the trade, not see the argument. Because many people will jump online to argue and they can't tell you how to make any money out of the deal. They're waiting for somebody else to make them some money. What I want to encourage you to do is you be the person that figures out how to make money out of these type of deals. And then you figure out how to persuade and influence other people how to make money out of these deals, even if it's just your group. But first, you have to be able to see how to make money out of the deal. Everybody else is waiting for somebody else to make them rich. That's not how traders think. Hope you got some value from it. David W. Williams, also known as Diamond Dave. I'll talk to you later.